Hello students and welcome to this Finance for Engineers course. In the earlier lecture, we have seen how to estimate or compute working capital requirement of the business organization. Normally, this is required in a manufacturing unit where there are certain components of current assets like raw material stock, WIP stock, or finished goods. So let us continue the same, that is examples on calculation of working capital requirement. So next example here is third example. Estella Garment Company Limited is a famous manufacturer and exporter of garments to the European countries. The finance manager of the company is preparing its working capital forecast for the next year. After carefully screening all the documents, he collected the following information. Production during the previous year was 1,50,000 units. The same level of activity is intended to maintain during the current year. That means here in this particular year also, the company is going to produce same number of units. The expected ratios of cost to selling price are raw materials 40%, direct wages 20%, and overhead 20%. Now the next is some additional information they have provided. First, the raw material remains in store for 3 months before production. Second, every unit of production remains in process for 2 months. Next, finished goods remain in warehouse for 3 months. Credit allowed by the creditors is 4 months from the date of delivery of raw material, and credit given to debtors is 3 months from the date of dispatch. The estimated balance of cash to be held rupees 20,000. Lag in payment of wages half month. Lag in payment of expenses half month. And selling price is rupees 10 per unit. So this is somehow information they have provided related to their working capital requirement concerning to current asset and current liability. So let us see how to prepare a statement of working capital requirement if this type of information is provided to us. What is the difference between the earlier problems and this particular problem? See, in earlier problem, they have given us per unit cost for every component of cost sheet. That is concerned with the raw material, labor, overhead, total cost, profit and sales. But here they have given in a percentage. Cost to sales percentage they have given. So how to calculate this? We need to again identify cost per unit as well as for total production. So let us start with the statement showing total cost and sales. So here you can see the statement prepared. Same information we have created here. So particulars, cost per unit, units produced, and total amount in rupees. So how I arrived at this cost per unit information, that is 4 rupees, 2 rupees, 2 rupees, 8, 2 and 10. So see, in an example at the end they have given that sales price as 10 rupees per unit, and in earlier slide the information was concerned with percentage of cost to sales. So direct raw material percentage was 40%. So 40% of we have to calculate on sales price, that is 10. So it is 4. Then labor percentage they have given 20. So of 10% it is rupees 2. Same case in case of direct overhead 20%. So 20% of 10 is 2. So like this I able to identify the cost per unit, and the total of these three components is total cost 8. Profit is the difference between the two, that is sales price minus total cost will give you profit figure. So I know sales price is 10 rupees and I calculated total cost as rupees 8. So the difference between the two is 2 rupees. So by this way, we first able to identify this cost per unit. Next, we know how many units this particular company is going to produce, that is 1,50,000. So by multiplying this unit produced to cost per unit, we arrived at total amount of cost as well as sales. That is 6 lakh, 3 lakh, 3 lakh, total cost 12 lakh, profit 3 lakh, and selling price 15 lakh. And now it will become easy for us to again go for calculating requirement of various components of working capital. So let us start with the working note. Same pattern we will follow for calculating the requirements of various current asset and current liabilities. First is raw material requirement. Period given is 3 months. Now we know very well what is the base for calculating raw material requirement. That is given in a example, direct raw material amount will be the base for calculating raw material requirement. So for 12 months it is 6 lakh. So how much for 3 months? Next is work in progress requirement, 2 months. And first we will calculate direct raw material requirement, that is 100% period, 2 months. Base is direct raw material amount 6 lakh. Next, direct labor requirement is 1 month period, 50% of the total. So for 12 months it is 3 lakh. Then how much for 1 month? Then C, direct overhead, again 50% period we have to consider, that is 1 month. The amount already is with us, that is 3 lakh for 12 months. So how much for 1 month? And then total of A, B, C will be our work in progress requirement. So let us see what is the answer. Raw material requirement is 1,50,000. Then in WIP, raw material requirement is 1 lakh. Direct labor requirement is 25,000. Direct overhead requirement is 25,000. The total of these three is 1,50,000. This is about the raw material requirement and work in progress requirement. So now moving ahead, these are the calculations concerned with other current asset and current liability component. So you can see here finished good requirement 3 months. So for 12 months, we know the base, that is total cost. The amount is 12 lakh. So for 3 months it is 3 lakh. Next is creditors requirement 4 months. So for 12 months it is 6 lakh. So how much for 4 months? It is 2 lakh. Debtors requirement is 3 months. Again on cost we are calculating this debtors requirement. That means base is 12 lakh. For 3 months it is 3 lakh. lag in payment of wages, half month requirement. So for 12 months, it is 3 lakh. This is nothing but based on the direct labor cost. And the requirement is for half month, that is 12,500. Next is lag in payment of overhead, half month requirement. This is calculated on direct overhead cost, that is again 3 lakh for 12 months. For half month, it is 12,500. And finally, cash requirement. It is already given in an example, 20,000. And now, on the basis of this information, we will prepare our statement of working capital. So in the books of Estella Garment Company Limited, particular year is not given. We are keeping it blank. And the same format we are following here. Current assets, stock of raw material, stock of work in progress, stock of finished goods, debtors, cash in hand, total carried to outer column, that is 9,20,000. Then less current liabilities. The current liabilities are given in this particular example. Creditors, outstanding wages, outstanding overhead. And the total of all these three components carried to outer column, the amount is 2,25,000. And then by deducting current liabilities from current assets, be able to compute the working capital requirement of Estella Garment, that is 6,95,000 for a given period of time. So this is another example concerning to computation of working capital requirement. Now we will see a last example related to this computation of working capital. So this is an example. Real company is desirous to purchase a business and has consulted to you and expects report exhibiting the average amount of working capital which will be required in the first year's working. Following information is provided to you and instructed to add 10% as contingency and assume that production is sustained at an even pace during the 52 weeks of the year. Here you can see some differences there in the information. That is 10% contingency. Here we have to consider, we have to add, and next information is concerned with the weeks, 52 weeks of the year they have given here. So that means we have to consider weeks for calculating various requirements of the current asset and current liability. So next information they have provided is this. So you can see here the information provided is something different. In a table format, they have provided particulars and estimated amount for the year. First is average amount locked up in A, stock of finished goods, rupees 5,000. B, stock of stores and material, etc., 8,000. Next is average credit given. A, inland sale 4 weeks and the amount is 3,12,000. B, export sale, 12 weeks, 78,000. Third, lag in payment of expenses. Wages, 1 week, 2,60,000. B, stores, 6 weeks, 48,000. C, rent, 8 weeks, 10,000. D, miscellaneous expenses, 6 weeks, 4,800. And finally, at the end, payment in advance, sundry expenses paid quarterly in advance, amount 8,000. So here, see the information provided. In first average amount locked up, they have not given any week or any month period into bracket. That means we have to consider this amount as a requirement of finished good as well as of a stores and material. So we will not calculate or estimate the amount of stock of finished good, stock of stores and material. Then, in case of second average credit given, we have given in a bracket weeks. That means here we are required to calculate the requirement of inland sale as well as of a export sale. And the amount given here is concerned with a year. That is for a 52 weeks. The same case will be in case of lag in payment of expenses. Into bracket they have given the weeks requirement, and in amount column they have given estimated amount for a full year. That is for 52 weeks. And we need to calculate as per their requirement, that is 1 week, 6 weeks, 8 weeks and 6 weeks. Payment in advance, again they are saying that paid quarterly in advance. So 8,000 is a amount for full year, and we have to take only quarter amount for our calculation. So presentation of data is something different, and let us see how to solve such type of examples. Pattern will remain same. The thing is, we should be able to understand what data they have given and what is expected from us to calculate. There is no need to prepare a statement of total cost and sales, because per unit information is not given to us, as well as how many units they have produced or they are going to produce. Nothing is given to us. So directly we will start with the calculating requirement. So we are directly starting with the debtors requirement, but here for debtors we have two types, inland and export. So first we will calculate for inland sales, 4-week requirement. So 52 weeks, the information is with us, 3,12,000. So how much for 4 weeks? The export sales, 12 weeks. For 52 weeks, the information is given 78,000, and we have to calculate for 12 weeks. Next is the lag in payment of wages requirement for 1 week. So they have given us amount 2,60,000 for a particular year, that is 52 weeks. We need to calculate for 1 week. In this way, lag in payment of stores, 6 weeks. Amount given per annum is 48,000. So let us see the answer. 24,000 inland sale, 18,000 export sale requirement, outstanding wages 5,000, outstanding payment of store 5,538.46, and the next is lag in payment of rent, then lag in payment of miscellaneous expenses and prepaid expenses quarterly paid in advance. For outstanding rent, the amount is 1538.46. For outstanding miscellaneous expenses, 553.85. And for prepaid sundry expenses, that is expenses paid in advance, 1 quarter. So directly we have divided by 4 and the amount arrived is 2000. By this way, we can calculate the requirement of various current assets and current liabilities. Now here we have completed calculation, and let us move to the preparation of statement of computation of working capital requirement for a given period of time. So it is in the books of Zeal Company, statement of working capital requirement for the year, and this is the statement, particular inner amount column and a outer amount column. In a current asset, now you can see stock of raw material, the amount which is given in an example as it is, we have taken in this particular statement. We have not done any calculation over there. Next, the stock of finished goods, same thing. They have given us 5,000. We have carried the same here. Now next is debtors, inland sale 24,000, debtors export sale 18,000, prepaid sundry expenses 2,000. Now keep in mind, prepaid sundry expenses, that is nothing but paid in advance, is an asset and not a liability. If the expenses we have paid in advance becomes our asset, so that also we have to consider as a current asset component. So addition of all these components taken to outer side, that is 57,000. Less current liabilities, under that outstanding wages, outstanding stores, outstanding miscellaneous expenses, and outstanding rent. Total of these 4 taken to outer column, that is 12,630.77. Then we calculated net working capital, that is current asset minus current liability, and the amount is 44,369.23. Here one more requirement was there from the company, that is we have to keep 10% amount as a contingency. That means we have to add 10% contingency into net working capital. So how, on which figure we have to calculate this 10%? You can see here on net working capital figure, we have calculated 10%. That is net working capital is 44,369.23. On this figure, we have calculated 10%, and that is 4,436.92. And then we added this contingency into net working capital, and thus we received the total working capital requirement of the Zeal Company for a particular period, that is 48,806.15. So students, here I have covered management of working capital unit, and in the next lecture we will start our next unit. Thank you.